Hello, my fellow investors, and welcome back to another fundamental analysis video. Guys, let us cover today the company Cloudflare. They just had earnings today, and wow, what an insane thing just happened with them. It's absolutely bonkers. I actually covered them on the live stream for Rumble a few hours ago. So if you guys want to see that, you guys can just follow us on Rumble. I was alone this time, but luckily for me, chat did a really good job in communicating with me, so that way it wasn't too boring. But we did cover this company, and I gotta say, from a fundamental perspective, it's looking like it has potential. But from a valuation perspective, it's absolutely insane. So we're going to cover this one today. So, of course, make sure to like, subscribe, comment. It really does help with the algorithm on YouTube as well as Rumble. And, of course, make sure to follow us on X as well. So, with that said, let us jump into the fundamentals of Cloudflare. So for those of you who do not know what this company does, Cloudflare operates as a cloud service provider that delivers a range of services to businesses worldwide. The company provides an integrated cloud-based security solution to secure a range of combinations of platforms, including public cloud, private cloud, on-premise software as a service applications, and low-T devices and website application security products comprising web applications firewall, bot management, distributed denial of services, DDoS, API, gateways, SSL, TLS, encryption, secure origin connection, and rate limiting products. Basically, the whole thing is when it comes to cybersecurity infrastructure, which is really, really good to see. So right off the bat, this one is already looking like it's a really hyped company. And well, taking a look at how they did today, you guys can see that their earnings completely crushed it. This thing went up a whopping, 8.35% intraday, so before the earnings actually came out. And then when the earnings came out, this thing jumped from $90.31 at close to a whopping, $112, essentially 24.01%. So if you guys own this company, congratulations. You just made a nice big amount of capital gain. So congratulations to you guys. Tell me what you guys are going to do. Are you planning to sell? Do you plan to sell covered calls on it? Explain to me what you guys are planning to do with this company. And of course, if you would like to mention how many shares you hold, that would also be greatly appreciated. The more interaction we have in the comment section, the better it is. So why did they gain this insane amount? Well, Cloudflare stocks jumps on earnings beat as the company wins large deals. So here they mentioned that Cloudflare rose 18%. Obviously, we know that that's not true. It's much higher, but the reason is because, guys, they beat on earnings and they beat very, very nicely. So let's take a look at their actual earnings. And of course, this will be linked in the description below. Highly encouraged for you guys to read it if you do want to invest in this company. So we got over here fourth quarter total revenue of $362.5 million, representing an increase of 32% year over year. You can already see where these numbers are going, right? You can already see that. And then as of the fiscal year, not the quarter, but the fiscal year of 2023, revenue totaled $1.3 billion, representing an increase of 33% year over year. Yeah, you can tell why we're getting a 24% jump after market, right? Because it's just absolutely crazy. GAAP loss from operations of $42.8 million or 11.8% of total revenue, and non-GAAP income from operations of $39.8 million or 11% of total revenue. Achieved record operating cash flow and record free cash flow for the fourth quarter. Operating cash flow was $85.4 million or 24% of total revenue, and free cash flow was $50.7 million or 14% of total revenue. This free cash flow is actually really interesting. We're going to read that in just 1 second as to why that is. So looking at what the CEO said, quote, "We had an exceptional strong fourth quarter. We grew revenue by 32% year over year to $362.5 million. Blew away our previous record for the new ACV, delivering the highest quarterly growth since 2021, and signed both our largest new customer win and largest customer renewal ever. Our pipeline close rates, sales force productivity, average deal size, and linearity all improved markedly quarter over quarter. To close out the year, strength in our business was driven by robust momentum with large customers, significant progress in the public sector, and growth in the Cloudflare One," said Matthew Prince, the CEO. "The machine that underlines Cloudflare is firing efficiently in all cylinders. While the macro environment remains challenging to predict, customers continue to turn to us to connect, protect, and optimize their systems so they can gain control. They need to accelerate their businesses." So, guys, as you clearly see, they are making bank, right? They're just completely crushing it right now. Let's take a look at the fiscal full year 2023 highlights. So obviously we know the total revenue of $1.3 billion, representing 33%. Take a look at this, guys. Take a look at this. GAAP profit was $989.7 million or 76% gross margin. That's insane, right? On a non-GAAP basis, profit was $1 billion or 78.3% gross margin compared to $762.8 million or 78.2% in fiscal 2022. Operating income, GAAP loss from operation was $185.5 million or 14% of total revenue compared to the $201.1 million or 20.6% of the total revenue in fiscal 2022. So guys, unfortunately, they lost. When it comes to the operating income, they are losing income left and right. It's really, really bad. In fact, it's actually getting worse. So unfortunately, this is not necessarily the best metric, and we're going to see that when we get into the calculator. It goes on to say, non-GAAP income from operations was $122 million or 9.4% of total revenue compared to the non-GAAP loss from operations of $35.7 million or 3.7% of total revenue in 2022. Net income loss, GAAP net loss was $183.9 million compared to $193.4 million in fiscal 2022. GAAP net loss per basic and diluted share was 55 cents compared to the 59 cents in fiscal 2022. Non-GAAP net income was $169.7 million compared to $44.4 million in fiscal 2022. Non-GAAP net income per diluted share was 49 cents compared to 13 cents for fiscal 2022. Now, here's the big one. And this is why I said, guys, this cash flow is actually really interesting because reading the cash flow, net cash flow from operations activities was $254.4 million compared to $123.6 million in the fiscal 2022. Free cash flow was $119.5 million or 9% of the total revenue compared to the negative $39.8 million or 4% of the total revenue in 2022. So this is crazy. They are pulling a Tesla. Guys, guess what? This is the first year that they're in the positive when it comes to the free cash flow. Again, that unfortunately is going to mess up the entire calculator. It really, really is. But it does give a clue that if they continue this general trajectory of them actually increasing the cash flow in the way that we're going to see, may actually serve as a pretty good buying opportunity right now, even though I do find them very, very expensive. Now, let us take a look at the financial outlook for the year. We can see that the total revenue that they're expecting in 2024 is between $1.65 billion to $1.652 billion, non-GAAP income from operations of $154 million to $158 million, and non-GAAP net income per share of 58 cents to 59 cents, utilizing weighted average common shares outstanding of approximately 358 million. So of course, we're not going to take a look at the entire earnings. Please read it for yourselves if you would like to invest in this company. This is not financial advice, guys. That's why I always put all the earnings in the description below, because you guys should be making your own financial decisions. So let's take a look at another calculator. We got the ticker for NET, market cap of 30.3 billion, a PE of NA. We saw this, right? All of their net incomes are in the negatives, which is massive. Some might even say huge. So, or hugely negative, right? So that is not good to see. We'll take a look at that in just 1 second. Current share price of $112, right? So we're not going to take a look at that again. This is absolutely crazy. Actually, never mind. I do want to show you guys one thing, and that is their 5-year graph, because, well, we could see here that they peaked massively as of what, November 20th, roughly November 20th, 2021, hitting around $211 at peak, guys. And then they came crashing back down to a low of around $39.90, at least in the 52 week, right? They were probably lower somewhere here and there, but on the 52 week, they went as low as $39.90. So yeah, as of right now, obviously we're at $112. So we are at we are at 52 week highs. So that just shows that we did have a decent amount of time. I would say like 3 years to actually buy into this company at a much lower valuations than this. Now let's take a look at what the 5-year average free cash flow and the last year's free cash flow is. And this is where it starts getting interesting. The 5-year average free cash flow of negative 16.14, but the last year's free cash flow positive 123.4. This is what I'm talking about. This is where at least it starts to pique my interest. Now, I already went through all of these graphs on the live stream, which is why I already have all the grades already there. But I'm going to go through them with you guys as well. We got the net income 5 years ago of $105.8 million. By the way, this was 2019. To 1 year ago of negative $202 million. Guys, that is a decrease of 91%. I mentioned that if you take a look at this, exclude the 3 year ago value, guys, this is a straight line going down, right? negative 105, negative 119, negative 193, negative 202. Is a straight line going down consistently. I'm going to say, guys, a 0% when it comes to the net income. The free cash flow, however, this is what piqued my interest because we got 5 years ago of negative 82.2 million to 1 year ago of 123.4 million. Okay, so that is a nice jump of 250%. We already saw the average. My biggest concern here is not necessarily the negatives because you can see steady increases 5, 4, 3, and 2 years ago. My big concern is the 2-to-1 jump. That's why for this grade, I'm going to give this 75%. Going from negative 20 million 2 years ago to a positive 123 is concerning. I don't know if they'll be able to replicate this year, but if they do, well, that will change the calculator a decent amount after that. And when it comes to the revenue, this one is absolute perfection. Seriously, it almost looks fake. It's staircasing as what I like to call. 5 years ago of 287 million to 1 year ago of $1.21 billion. Guys, that trend line hits those graphs every time. That is an increase of 321.25%. Easy, 100%. Now, the assets minus the liabilities, this one could be a little bit better. You can see that they are in the positive, but 2 years ago they fell and then they came back up. But you can see that the general trend line is to essentially come down from 4 years ago. All in all, I don't see it as too bad, but still, it's a little bit of caution, right? Average total assets being 2.3 billion, liabilities of 1.6 billion, a difference of $730 million. I'm going to give this guys a 65%. Now, unfortunately for the cash flow minus the liabilities, this is consistently going down 5, 4, 3, and 2 years ago. But can you really blame them? They had negative free cash flow increasing, but still negative. And the only year where they had positive free cash flow, this went up. So I look at this and I'm like, okay, it's actually not as bad as you would think, knowing the context of the free cash flow. Understanding this makes you think that, okay, if they continue to do positive free cash flow, we should see less over here, right? Closer and closer to zero as the years pass by. We can see that 1 year ago, it is negative 1.77 billion. The average being negative 1.23 billion. I'm going to give this guys a 60%. It's actually not as bad as you would think from first glance. Now, unfortunately, this is a growing company, right? Shares outstanding are through the roof. However, this is once again due to the fact that when they IPO'd, they issued a ton of shares the year afterwards. Normally, companies do this when they IPO, going from 91.5 million shares to today of 335.7 million shares. Well, that is a massive jump of 267% on the 5 year. Previous year to the current year is an increase of 1.7, so around 2%. So I looked at this and I'm like, okay, by the looks of it, it does seem that they are pretty consistently issuing shares from 4, 3, and 2 to 1 year ago, right? So I look at this and I'm like, it's bad, but only a 1.7% increase in the 4, 3, and 2 years ago. I'm actually going to give this guys a 70%. I do foresee them issuing a lot more shares, but I understand as to why they're doing it. And lastly, when it comes into the cash and equivalents, they currently hold $94.1 million with an average of $147.52 million. The overall grade of this tells us that proceed with caution, right? 62%. The main problem here is the net income consistently decreasing. The free cash flow can help it make it better if they prove that this year they'll be able to beat 2023's free cash flow numbers. They might, but then again, that's a pretty massive jump from the 2 years ago to the 1 year ago. So we'll see what happens this year. All in all, though, proceed with caution if you want to invest into this company. Now, if we take a look at the discounted free cash flow, guys, you can see that I already put in some numbers. I'm going to say a share issuing of 10% because 1.7% year over year for the next 5 years, let's just say 2%, that ends up being around 10% on average, right? And then for the median, let's say -7 and then -4. Now for the revenue, take a look at this, guys. Seeking Alpha is showing a revenue of 36%. So you know what? I said, let's go with it. So I went with 35, 45, and 55 just to see what in the world happens. And putting this, guys, we get $6.92 to $12.40. After that, $14.09 to a high of $25.07. Margin of safety of 5, 10, and 15, $11.97 to $23.82. Now, for all of those of you who might say, the thing just jumped 24%, you're clearly wrong. Guys, this is not telling you what the share price is going to. On the contrary, this is telling you what price you should pay for the company, assuming these revenue growth assumptions. The thing is that the reason why this is so low is because the cash flow is in the negatives. It is increasing in the negative, but it is skewing the numbers to the downside. The more years pass, in the cash flow, assuming that it does continue into the positive direction, or at least maintain in the positive direction, or at least maintain positive, these numbers will clearly go to the upside. So this is why it's a major risk investing into an IPO company, because you have no idea how their fundamentals are going to go. Sure, does this company have potential? At least in the free cash flow department and the revenue department, it's looking great, right? At least in the free cash flow one, you're seeing some increasing, consistently increasing as the years go by, even though it's still in the negative. So I look at this and I'm like, it's a little bit concerning, but $25.07 for the highest assumption. Guys, if we take a look at this one more time, the 52-week low is $40. So you could have made the case that, hey, if you're using the calculator, if you put in $25, right? If the calculator is showing you $25, you could essentially make the case that at around $40 was a pretty good buy, and well, you would be up significantly right now, assuming based off of this assumption, right, the 55%, and issuing shares of 4%. So yeah, you actually did have a pretty good opportunity to buy this thing, not exactly at $25, but fairly close. So thank you guys so much for watching. Cloudflare is a company that honestly, it's a gamble for me. I would not invest into it, but I know some people that have gotten very lucky and made a decent amount. For example, Ghost Walker on Rumble has made a decent amount on this company, as well as ARM. So congratulations to you if you have done that. Me personally, I like to buy companies and hold them, not necessarily bet on them. But if you guys are figuring it out and making money on these massive swings that we've been seeing for the past 14 days of the earnings season, congratulations, guys. Really, congratulations. So yeah, at least for me, it's not really something that I would buy into, but if you guys are making out, congratulations. So that pretty much does it for this video, guys. We are no longer going to be live streaming for a little bit on YouTube. We're only going to be live streaming on Rumble because we did get the partnership. So if you guys would like to see the live streams, make sure to follow us on Rumble. The link to our channel is in the description below. We are not going to stop the videos, however. That will continue to happen. And once we start solely live streaming to Rumble, I know that today's live stream was only to Rumble, but I kind of just wanted to keep it to that because it was a really slow news day. It really wasn't that interesting, especially for probably the YouTube audience. But yeah, you guys really didn't miss much. But starting Wednesday, we're only going to be live streaming to Rumble. So if you guys want to catch that, make sure to follow us. The link to our Rumble channel is in the description below. So thank you so much for watching. Make sure to like, subscribe, comment. It really does help with the algorithm on YouTube as well as Rumble. And of course, follow us on X. So with that said, peace out, and we'll see you all next time.